the telecom sector. Now, today, Goldman Sachs has written a note and they've outlined the 7 questions investors frequently ask about the sector, its prospects and its triggers, and they're trying to give an answer to all those questions. So let me start with the first one, and that's going to be, when will the next tariff hike take place? On that, they're saying, according to them, the tariff hike should be in the middle of this calendar year, though the buy-side expectation is that it will happen towards the end of the calendar year. So that's the first question, a tariff hike. The second one is that what if there is no tariff hike? What will be the impact? Because the street, as I said, is currently expecting a tariff hike. The EBITDA estimates today bake in a tariff hike. If they don't take place, then according to Goldman Sachs, the impact on FY24 EBITDA estimates for Bharti will be 8%, and for Reliance Jio, it will be about 14%. 3, there is also another worry that, the companies may focus on subscriber acquisition and not tariff hikes, because right now they're rolling out 5G. They want to get maximum subscribers on 4G or on 5G, and therefore that's their focus. It's not so much on tariff hikes. According to Goldman Sachs, there is no correlation between the 5G rollout delay and the subscriber acquisition. Point number 4, what changes for Vodafone Idea after the government decided to convert part of the AGR dues, the interest on the AGR dues, into equity? Goldman Sachs says there is no immediate cash flow relief. The cash flow relief will take place only FY26 onwards. But out of the total debt of $28 billion, $2 billion is now getting shaved off, because that debt is now being converted into equity. And according to them, it still implies, despite the government backing and the government holding a 33% stake in Vodafone Idea, they see a low probability of the company raising a meaningful amount of external capital. That brings you to the next question: how much capital does Vodafone Idea need? And according to them, it's $8 to $10 billion. Fine. And the 6th question is Indus Towers, right? That's the other important stakeholder. If Vodafone Idea finds it difficult, challenging to scale up, and they actually scale back, what could the impact be on Indus Towers? Goldman says a 41% downside potential. And lastly, how should we think about Bharti Airtel, right? That's the pure play telecom, or one of the big pure play telecom options for investors in India. They're saying there is no meaningful downside risk or catalyst for Bharti Airtel. Their bull case is that the stock goes to levels of 1,098. That's a 40% upside from current levels. But their downside, the bear case, is just 705 rupees, which is a 10% downside. So 40% upside to hit the bull case, 10% downside to hit the bear case. So according to Goldman Sachs, the risk reward is attractive. Any correction should be used to buy into Bharti Airtel. So those are some of the questions and that investors are asking about the prospects for the telecom sector. Deepak Shenoy, the founder of Capitalmind, joins in. Deepak, we've spoken in the past on Bharti Airtel, but now the recent development has been on Vodafone Idea. It's got the implicit sovereign backing. Your thoughts? What changes for the sector? And would you think that this is a big negative for Bharti Airtel? Because across the board, consensus is fairly bullish on Bharti Airtel.
So firstly, we're invested in Bharti Airtel, so very biased on that front. But looking at Vodafone Idea, so Vodafone Idea, to give you a rough idea, I think they lose 7,000 crores per quarter, mostly on interest and depreciation. They make 4,000 crores in operational profit. So that's, sales minus operational expenses. So even if they were to up their prices by 10 or even 20%, that will add only maybe something of the order of 1,000 crores to their top line. But their bottom line, PAT, is actually minus 7,000 a quarter. So it will not make a meaningful difference to the fact that they continue to have a substantial amount of interest to be paid. Only 10% of the total, dues have been converted to equity. They are also net negative equity by about 76,000 crores, which after the government conversion will still be minus 60,000 crores on, negative equity. And there's been no, hope of any promoter increasing stake at this point. I mean, I know that everybody's talking about it, but it's not happened. Given this, and the fact that they can't raise their price by more than 10 or 15%, because that's where Jio and, that's the range in which Jio and Airtel's margins or plans are at the same point. I don't see this as a very positive thing for Vodafone. And the implicit government backing is almost like saying right now the government's got this stake by not actually paying for it. But because they couldn't see a sign of recovery from Vodafone Idea in the first place, they converted part of it to equity. I don't think this actually means a backing in any meaningful way. I think the market share from the losses of Vodafone will flow to Airtel and Jio, both of which we are invested in. So biased in my opinion there. I think they're going to be the eventual winners. Vodafone probably, has to dig its way out of the hole that it's in right now.
So according to you, very quickly, what's holding back the telcos from raising tariffs?
Demand. If they raise tariffs, demand goes down. We've seen that happen in the past. I don't think there's a lot of appetite for at the mass scale for a 10 to 15% hike. I think it'll come slowly. There'll be 5% hikes every half year to ease the effort. Now, the prices are not very high. In 2004, I remember I used to pay 10,000 rupees a month because I used to do a lot of across the country calling. 10,000 rupees a month. Today, a prepaid unlimited calling plus 1.5 GB per day plan costs 2,900 rupees a year. So you could get, the rates have actually fallen quite substantially. At the top end, there is still some scope for increase in prices. But at the bottom end, I don't think there is too much. I would think that they would actually increase prices at the top end, but keep the prices constant at the bottom end. That won't change their top lines too much. I think demand will just fall off a cliff if they increase prices by much more at the bottom end.
That's an interesting take, Deepak. Yeah, listening to you carefully, I guess that's what happens in so many industries, right? It is the top end that subsidizes the bottom end. Maybe telecom goes the same way. We will find out. Stay on. We have more questions for you. The next one's going to be on Cipla. Now, that stock is the biggest Nifty loser today. Slam dunk, 6 to 7% down. So what's ailing Cipla? Well, the US FDA, to put it mildly, because they've come in and inspected their Pithampur facility, and they have come out with 8 observations. Now, Ekta is joining in. Ekta, I know that we don't have the exact nature of these observations and what the FDA's issues are. Why is the street so worried about this one?
Well, the nature of the observations is what the street is worried about, and the fact that they are 8 in numbers. So that the assumption is that, it's probably going to be difficult for them to solve 8 observations. And one of their key drugs is filed from this particular facility, which is basically the inhalation drug Advair generic. So that, the estimates are that they could probably hit the market by Q1 of FY24 when it comes to Advair generic. Now, with the company having received 8 observations for the Indore facility, with the quantum being high and the, assumption that the nature of the observations will be difficult for them to solve it quickly, assumes that Advair generic will now become an FY25 product. And there is a past precedent that they are going by. The Goa facility, which is also an important facility for the company, did receive a warning letter, and a Brixon generic, which is a cancer drug, is filed from that particular plant. If in case we did see a Brixon generic also getting delayed, and that is expected to be an FY25 product. Now, that is the worry which the street is basically currently contending with when it comes to Cipla. Now, I just want to put it into perspective in terms of news and the Indore facility as well. They manufacture respiratory products as well as oral products. This particular plant, the Indore plant, it is one of their key plants, and it contributes to around 25% of their FY23 EBITDA. So it is an important plant for other products as well. Now, Incred has written on this. They maintain a hold, but they've cut the target price. They believe both the products, Advair generic and a Brixon generic, are likely to see a worse competitive landscape in FY25 versus FY24. Macquarie, JP Morgan, both have an outperform overweight rating on Cipla respectively. JP Morgan has said they currently forecast Advair generic launch in Q1 of FY24, 5 to 6% contribution to EPS in FY24 and 25. Well, the proof of the pudding is really going to be in terms of what the Form 483 holds, because in the past we've seen many observations solved in just a couple of months and few observations resulting in adverse reactions.
Got that, Ekta. Thanks very much. I guess it's just that when you've had such a dream run, a one-way move on a stock, then anyway, these issues become perhaps excuses for some profit taking. Pull up a long-term chart on Cipla. From the lows of 400 odd, that's where it was when the lockdowns happened in 2020 in March. From then, it rallied all the way to 1100. And this year, it's kind of cooled off. Cipla, this year, is, as you can see, is down about 10%. If you look at a one-year chart, it's been a dream run for this one. Deepak, what's the sense? I mean, I can understand why people would want to get off quickly the moment they sense any sort of negative news. But what would your advice be?
So no positions here. So I think the problem here is the FDA is back. So I think, the 483 is, of course, it's not disclosed yet. So we don't know the observations yet. But if it results in a warning letter, then there will be, there could be it could be a much more adverse reaction depending on how Cipla responds to it. I think, they've seen this in the past. I think in 2020, they got a warning letter. There was corrective action and a lot of things that happened at that time. But in general, I would say, this is the only performing pharma stock. Most of the others from 2015, their charts just look horrible. They've, a lot of companies have retraced quite substantially now, even the mid caps. So I would say over here, the FDA risk is back. So anyone who's targeting companies, who has companies in targeting the US market, mostly unbranded generics, I think that might be, that the FDA thing may be the Achilles heel here for a recovery. When we don't have any positions, and honestly, this action kind of brings those fears back for us as well. So don't have a position. That's all I can say.
All right. Hi, Deepak. Deepak, we're dreading a very scorching summer that's due. And already it's got quite hot here in Mumbai. Voltas, it appears the street is sensing that there's going to be some inventory stock up or some, pre-season buying that could take place. That one's up close to 10% in this year. It's been a relative outperformance, and the numbers have been far from inspiring. They've lost market share. The margins as well have been under pressure. How would you approach this pack, whether it's Voltas, Blue Star, or the other companies from this space?
So I think there's even Amber if you go up the value. I mean, the chain of manufacturing itself. But there's again no positions here. But I would say we always get excited about these stocks just around at this time, right? Ice cream stocks will go up right around now because we'll say how summer people eat ice cream, kids have holidays and so on. So these are like stocks of cyclical interest in that sense. But unless there is a shortage of any sort, I don't think prices can go up meaningfully in terms of AC prices itself. I don't think there's a capacity to take substantially increased prices at this point. So we'll have to see volumes. I don't believe this summer will be any meaningfully different. The last summer was not as bad, so maybe there is going to be contributory buying. But I would say in general, the cyclical nature of this does not make it interesting. Voltas is more a long-term stock. So I think one has to look at it from that perspective. We don't have a position. We think it's expensive. But it's a solid company that way. There's no doubt about the brand itself. So good company, bad price. So not interested at this point.
At that time of the year when you get your AC's service, right?
Oh, yeah.
This conversation about ACs reminds me to do that. But consumer durables is a space, Deepak, right? All bombed out completely. Significant price damage in that space. By the way, on a lighter note, you said you used to run up 10,000 rupee monthly bills in 2005, you said, right? Four.
Well, that was just before I was getting married, so my wife was not in the same town.
Prashant is noting all the right nuances here. It caught my attention as well. Just saying,
Deepak was thinking I answered. I spoke about Voltas, I spoke about other sectors, and the only thing Prashant picked up is phone bills. No, I was just at a different time, and absolutely, I remember that. Deepak, we'll take a very quick break here. Stay with us. We'll come back in just a bit. We'll sort of have a few other questions, but we'll also have Dinshaw Irani of Helios Capital India joining in on the other side to take the conversation on market.